today I am back, and guess what? Back with another video. So today I'm going to be doing question 4 of module 5, and we're going to be doing the entire question. Though this video is going to be divided into two, I'm going to have the cash receipt for customers and the cash paid to employees and suppliers in one video, and the rest of the things in the other video. Okay, let's start. So we have question 4 actually. I'll attach a picture of this question in the description box, and yeah, everyone who doesn't have access to it will have access to it. But the nice part of it is that BCom accounting students have it, and BOC students have it from UL. So it's a common question for both. The booklet of BCom accounting and the booklet of accounting of BAC is the same booklet. It just has two different questions at the beginning, but the rest is the same. So I'll be covering more land, meaning I'll be covering BOC, BCom student as well. So, excuse my voice. I can hear horror. It's going through the most. Okay, so let's start. Basically, we're going to be starting with cash received from suppliers. Cash received from customers. Which one is that one? Cash received from customers, right? So for your cash received from customers, you're obviously going to take your sales amount, sales, and you add your trade receivables at the beginning, and then you subtract your trade receivables at the end, right? So they tell you that the gross profit for the year was 152,000, and the profit was 25%. So you're gonna say 25% equals to gross profit over sales multiplied by 100. Then obviously these will cancel and you'll have 0.25, which equals to 1520 all over sales. And then you cross multiply, solve, and you should get that sales should be equals to 6080. Right. So now you have your sales amount, which is 6080. Right. And then you look at your trade receivables. There you are. So check first, is there something that is affecting trade receivables? There's nothing. So if there was bad debts or credit losses, you'll have to subtract them, or anything that changes the trade receivables, because we have the trial balance, not financial position. So you're going to say 396,400. 396,400, and you subtract your 342,850, and then you're supposed to have 613,3550. So this is your cash received from customers, the 63550, right? So now we're done with the cash received from customers. Let me erase this and let's get to the hectic part. Okay, so cash paid to employees and suppliers. So we're obviously going to start with a profit before tax. Oh, sales first, sorry. You're gonna have sales, then profit before tax, and then you're gonna have your net expenses. I fear, is this going to fit here? Okay, we'll figure that out. So your sales amount you just calculated before, so you're gonna have 6080123, right? And then your profit before tax, let's check for it. Profit before tax they gave you 565,500, note number 4, and you'll have 565,500 in brackets, and then you're going to look for the difference for these two, and you'll have 5,514,500. Right. So now let's move on to the next part. We're moving on to which one first? Cash items or the ones disclosed separately? Let's do the ones disclosed separately first. So the ones disclosed separately, I'm not going to write the heading of it, but we're writing um eliminating the ones that are disclosed separately, something along those lines. So you're gonna have obviously your interest expense, it has to be somewhere, and there it is. Galaxy paid a total interest amounting to 20,350 during the financial period. No interest was accrued for the next year. So you'll have interest expense, which is 20350. It's positive because we add all our expenses, right? And then we're gonna have interest received with note 2. Okay, so for note 2, they tell you that the bank deposit and the savings account was held at New Bank. Interest received on the deposit was 3675, and the interest on the savings account was 14,000. All interest was received during the year, and nothing was accrued. So you're gonna add the 14,000. Let me use a different marker. So you're gonna have 14,000 plus 3675, and that should give you 17675. We're putting it in brackets because we're dealing with an income. So an income will obviously be bracketed. You should go to the video, my first video when I was dealing with this, and explaining that incomes are bracketed and expenses are not. Yeah. So now that is all because we don't have dividends received, but we have dividends paid. So yes, we don't have dividends received. Now let's move on to the next part, which is non-cash items. So obviously going to have depreciation like always. This depreciation in this question was a bit tricky, but we'll deal with it. Depreciation, right? So let's go to additional information 1. A vehicle with a gross carrying amount of 250,000 and accumulated depreciation of 12500 was sold with a profit of 30,000. So let's add the 30,000. So we'll have profit on sale of vehicle at 30,000. Since it's an income, you do what? You bracket it, right? New vehicles was purchased to replace the vehicle that was sold. Vehicle depreciates over the useful life of 5 years with no residual value. Yeah. So now, okay, let's start. So you're obviously going to ask yourself, how can I get the depreciation amount if I have accumulated depreciation and I don't have this? Remember, depreciation is what depreciation? The depreciation of the year. at the end of the year, it forms part of your accumulated depreciation. So the right thing that you can do is open a T account for accumulated depreciation. You have a negative asset, so it's negative plus. So the balance at the beginning of the accumulated depreciation, that's 183,200, and the balance at the end is 148,800. Right. So right now you have these two, and then they told you that they sold a vehicle at 125,000, accumulated depreciation of it. Right. This 125,000, let me explain something. When you're selling an asset, you take out the cost of the asset. You take out the accumulated depreciation of the asset in your books. So you take out everything that is in relation to that asset, right? So by your T account for vehicle, you'll be subtracting the cost, the gross carrying amount of the vehicle. Also, in the accumulated depreciation account, you'll be subtracting the accumulated depreciation, right? So then it means that this 125 will be on the side. Let me say sold, right? So what increases the accumulated depreciation account is your depreciation, what we're looking for. So this will be a balancing figure. So you're going to do this, close off your account, and you're supposed to have so you're gonna take the addition of these two, subtract this, and you're gonna get 9,600. So we have 9,600 here, right? It's a expense, so it will be positive. So let me erase this part. All right, now let's move on to your allowance. Yeah, I doubt I'll have space, but we will work it through. You know, I was watching other YouTubers and their YouTube channels, and they have big boards, and I'm like, one day, just one day, if God allows me, I'll be here. All right, let's continue. So you'll have your allowance, your opening balance, and your closing. So your opening balance, it's going to be allowance of expected 39,650, right? 640, and then you're gonna have 3,4,2,8,5, and this will obviously be bracketed, and then you look for the difference of these two, and you're supposed to have 5,3,5,5. Now this is a decrease, it being a decrease, right? Let's understand each other. It's a decrease. 5,3,5,5, decrease. So it being a decrease means it's an income, right? Now, when it's an income, it means that you're going to bracket the decrease, right? So now, every time you have a decrease in this thing, it's an income and it's bracketed. So you put it in brackets, right? So now you know every time you have allowance for expected credit losses and it's a decrease, you bracket it. No matter if the amount that you get is positive or negative, you bracket the amount, the difference, you bracket it, right? Okay, let's move on to prepaid expense. So prepaid expense is under your assets. So you're gonna have prepaid expense. Let me say prepaid expense in the beginning and prepaid expense end. So you have 3850 and 5270. Now, since you're dealing with an asset, you ask yourself which one is negative. The one which is on the negative side initially will be the balance at the end, right? Now, let's move forward. Your accrued expense here. You have your accrued expense, so you're gonna say accrued expense beginning end, right? And then you have 3740 and 1560, right? Which one do I bracket? You ask yourself, which one do I bracket again? And you bracket your balance at the beginning, because while we're dealing with the liability, balance at the beginning is on your negative side, right? So let's move forward. Now, you're going to, after you're done with this, you're going to move on to your inventory, right? And your trade payables. So your inventory has decreased. It decreasing means it's an inflow. Now we know that. So you look for the difference, and the difference of these two will be positive because there's a decrease. So we'll have 109340. You take these two amounts and you look for the difference and you get this one, and you leave it like that because it's a decrease, right? Now let's move on to your trade payables. There is an increase in these two, so there being an increase, you'll have inflow, so meaning it's going to be positive as well. So you're going to check the difference of these two, which is 38,400, and then you're going to put the difference there. So it's going to be positive because it's also an inflow. So now you're going to start from this point. Remember to put this into brackets, and then you add everything and subtract everything, and then you get your balance at the end. Let me calculate that off camera and get back. All right, so you have 5312440. Yo man, that is it for the video. This will also be negative, so I'm going to be ending here for this video. Please watch part 2, where we'll be doing the full cash flow. And yeah, we'll be dealing with different transactions there of the full cash flow. Now we're done with the top part of the cash flow, which means we can do the second part. So please watch the next video and finish up this question, so you make sure you understand everything. From me to you, see you in the next video, and bye.